Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be.
All right, today's CPI. Actually, you know what? I don't think we have that in the title. Let's fix that up. Today is the 13th. CPI. CPI. Let's come and look at the charts here. Actually, no. Let's turn on some music. Some drum and bass. Yes. Right? It's one of those days. Do this. All right. Oh, you know what? I'm gonna have my voice meter thing come on. That would probably help. All right. So to the charts. So yesterday, I don't know. It was a little messy. Kind of more to the upside though in the treasuries, but the auctions did not go very well. Here in the overnight though, all of that move retracing back up as the market across the board seems to think that this CPI is going to come out under expectation. There you can see it on ES, really strong, solid rally here. Oil still kind of where it's at. Gold and silver, well, it's still tilted to the upside, but yeah, you know, middling a little bit. Copper doing really, really well this morning. I don't want to look at that. What's going? It seems like there might be a catalyst going on in the copper market that I didn't hear about. Bitcoin still hovering around 2250, and the dollar collapsing all the way back down to 107. I don't know. Like 107 is still really high, right? Really, anything over 100 is high, in my opinion. But it is coming back quite a bit. So that's where we're at. You have to excuse me. I did have to restart my computer this morning, and yeah. So I'm going to minimize these stock DOMs here for, actually no, not that one. Keep the S&P 500 up here nice and big. BMO downgrades Adobe, says there are long-term concerns on durability of the Creative Cloud. Nintendo shares jump 5% after new game Splatoon 3 hits Japan sales record. Just kind of checking things around. Jim Iorio, the current inflation could be short-lived if the government could avoid doing four things: drive up input costs like energy, it did; inorganically drive up wages, it did; give money directly to people, it did; increase spending financed by more debt, it did. I am concerned that if this inflation report is good, that we could still have a further bout of inflation later on. You know, it might. I'm worried that people get lulled into a false sense of security here, right? But again, like everybody seems to think that this number is going to be under expectation. So the big number that I'm paying attention to, U.S. core CPI month over month, we're looking for a reading of spot 3. The headline number is going to be negative spot 1. That's the expectation, okay? For it, because that includes energy, and energy has continued to move down. But it's that spot 3. I will switch this up. Maybe we get lucky. I'm kind of hoping it will be bad. I mean, for us, from a trade perspective, it would be better if it was bad, right? But I actually, if I were to make a prediction, I think that the core will come in line. I think that the expectation is reasonable. The core will come in line. S&P 500 maybe has a little bit of a rally that is short-lived. That's my prediction. But if it's bad, say core CPI is spot 4, spot 5. Especially if it was spot 5. Spot 5, that would just cripple this market, man. It would just cripple it. Because everybody's gotten themselves positioned for it to be good. Based on what? I don't know. Okay, well, all of the liquidity in the micros have pulled here. We got 10 seconds, 5 seconds. Okay. Holy shit. Holy shit. Holy shit. Spot 6. What? I tried placing an order. I think it just rejected them all. Yep, rejected. Oh my god. Are you kidding me? This market never ceases to entertain. Oh my gosh. Well, I don't think I can put an order in there now. That is a little bit too wild. I am gonna let it chill out. The S&P 500 is dropping like a rock. They were at 4170. They are already at 4070. They have already dropped 100 points in the S&P 500. I cannot believe I have never seen a situation where the market has been more wrong about a number. Oh my gosh. All right. Well, this is just such a big surprise. We have got to dig into this report. Wow. Let's change the title. Hot CPI. Markets crushed by hot CPI. This is insane, folks. Okay, latest release here. The consumer price index for all urban consumers rose 0.1% in August on a seasonally adjusted basis after being unchanged in July. The U.S. Bureau of Labor Statistics reported today over the last 12 months, all items index increased 8.3% before seasonal adjustment. Increases in the shelter, food, and medical care indexes were the largest of many contributors to the broad-based monthly all items increase. These increases were mostly offset by a 10.6% decline in the gasoline index. The food index continued to rise, increasing 0.8% over the month as the food at home index rose 0.7%. The energy index fell 5% over the month as the gasoline index declined, but the electricity and natural gas indexes increased. They are not holding back here in the treasuries. They are already at 3.4. This is really hard to sit and watch and not be clicking like crazy. I did put orders in there and they said that my bid of 33.28 violates the high band. 33.21. Yeah, okay. Well, the numbers that it was even trying to place the orders at was bad anyways. Look at that. Like I was saying, okay, well, 4.2. Look, we're 3.4 rather. We're already 3.42. This is going to go like straight to 3.5, isn't it? This is going to be one of the largest interest rate increases on a daily basis. We got to be careful. There is going to be some liquidity holes that suck us back up here, right? And it looks like they are in the pullback area at the moment. So let's try and be tactical about it. Okay, so I'm just coming down here through the numbers. Medical care services 0.8 versus 0.4 the previous month. Shelter 0.7 versus 0.5 the previous month. New vehicles was up pretty big. Spot 8 versus spot 6. Now medical care commodities were down, but apparel being down 0.1% last month is now 0.2, and food was 0.8. This is all pretty crazy. I'm tweeting. Bob Iacino says CPI, that was unexpected. Nick Timmerell is reporting that CPI inflation rose 0.6% in August. Justine Wolfers, this is a much worse CPI report than anyone was expecting. The decrease in headline inflation due to lower energy prices is there, but the underlying rate, best proxied by core inflation, is running a fair bit higher than anyone forecast and most of us hoped. Maybe the video that we need to make this weekend is why the models are all wrong. Everybody awake after this drop? Man. Well, I could try taking some orders in here now, but it's just a little bit too wild. The micros in particular are just like, wow. Like the funny thing is like when the number hit, I saw some orders sitting out there. So I tried buying it, and I've gotten away with that in the past, but this time it rejected all of my orders. And the price, because what happened was all of the orders pulled. So the best bid, best ask was like way far from where I was trying to place my order. You had some? No, you did not. Man, and the dollar, the dollar starting out here before this news at 107.8. It is now hitting 109.7, up $2. I've never, have I seen? I don't know. I haven't been paying attention to the dollar for my whole trading career quite as closely as I have right now, but I cannot recall a $2 move. It's insane. It really is. And I do not think I can recall a piece of news where, no, I can. What would be a piece of news? I'm not sure if I can recall an economic report. I can think of like unexpected news that has come and hit the market and smashed the market down 100 points. But an economic report, I cannot think of an economic report that smashed the markets down 100 points. This is just crazy. Absolutely bonkers. Absolutely bonkers. Yeah, this is Kevin. We had some limit downs during the beginning of COVID, and the ones that I was thinking about in particular were like Donald Trump tweets and stuff, right? But like just off of the economic report itself, have we seen a 100-point drop? I'm sure it's probably has happened, but I just can't remember it. The one that I will always remember. I mean, this is a piece of news that we're going to remember for a long time, for sure, right? But the piece of news that I remember the most was when everybody was expecting a negative jobs number and it came out to be positive as much as it was. So they were expecting like negative 200K and we got positive 200K. Now that one was crazy. So when I placed my orders, by the way, I placed my orders right when the news hit, right? I didn't get messages that they were rejected until 23 seconds later. Can you believe that? Wow. Okay, so it looks like the liquidity hole is forming around 0.25. At the moment, it looks like Nintendo and Adobe are the stocks to watch this morning that I'm seeing the most news about. Let's come over to the most active list here, see what else is on the list this morning. Apple, NIO, AMD, F4. So they're usually the same ones, unfortunately. Carnival's still hot, apparently. I don't know if these numbers update overnight, though. So, next question. Is that it? Or is this trend down day? Well, the treasuries did hit. Let's see here. Let's come back. Oh, yeah. Oh, man. Can't get involved in this. Oh, man. Oh, that is so ugly. So I don't think that I can. I don't think that I can trade it. I'm gonna keep an eye on it and hope that I can get a good price, but oh no, Brad, we did not. What you just witnessed was the best example in history of the market being dead wrong about an economic number. Next time somebody tells you the market already knows what's going to happen, it's already priced into the tape, don't follow the news, etc., 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 you just point this day out, right? The market was buying furiously yesterday. There was absolutely massive options trades. So like with the put call ratio went from like one of the highest it's ever been, meaning lots of puts, to like 1.05. So about as low as it gets. And in one day yesterday. So the options traders were placing very bullish bets, and they were dead wrong. So like I was coming in here, and remember before the news said, right, I said, well, if it's high, it's gonna crush this market. Like if it was spot 4 or spot 5, how many times have I come in here on a CPI and said that, and then the core number that we got was much higher? That has happened so many times now. Dude, Uzi, isn't this nuts? All right, so who did actually take a trade in that? Tobias claims he takes a trade. I don't know if I believe him anymore. He's just a little bit too you're gonna have to start posting them before you do them for me to believe you, because those ones are just a little bit too good to be true. Uzi's like, hell fucking no, right? So this is the thing. That doesn't matter, Tobias. Tell me, like, as you take the trade next time. I tried to dick with it in a sim order and they were rejected. You sold 10s for a tick, Morgan. What? So, well, I wonder what goes on, because I don't know if it's rhythmic or if it's the exchange that when you get this situation that it's like it's unresponsive. Because like I said, I did put an order in, but they got rejected because there was no liquidity out there at all. And I mean, I wish that they had gotten accepted. Not that it would have traded, but but you can see like what it's doing right now is exactly why I'm like, I can't touch it, because even though I know that the trade is sell treasury, it's going to come back too far. My dogs are 0.6% more expensive to feed, darn it. This is This really changes the trajectory of things, doesn't it? But again, well, this goes back to the thing that we were reading by Jean-Philippe Bouchot yesterday, right? The models that people have been using for inflation are just not very good. they're just straight up not very good. So I feel like at this point that whatever the analyst estimates are, you just have to completely ignore them and assume that it's going to be higher. Everything long for like the last 5 trading days just fucking out. Cute. Yeah. Well, so I'm kind of trying to think about knockoff effects now. By the way, I should just point out that the gold got slammed too. So that's one that I think is kind of interesting, right? Where does gold sit here now in relation? It's a retracement of yesterday's move. I really wonder, is there a point at which the correlations on gold's turn around? Because it seems to me like if inflation continues to be high, that gold should do well, and it just doesn't. But then here again, like if inflation was high, yeah, check the poll results from yesterday. Actually, that's an interesting case, Mr. Bond, because the higher than expected did win by just a tad, didn't it? Gold is the most difficult asset to trade, I feel. Well, I think that what goes on, I think this is the case with both gold and Bitcoin, that it's not really trading on fundamentals. It seems to me that like the number of traders out there watching the news, understanding the macroeconomic environment and trying to make a trade on gold or Bitcoin like we do, there's not very many of them out there. And that all of the money allocation that's happening is from these portfolio allocation people. Like the quants, the most popular and successful quant strategies that I see out there are portfolio executions, like a CTA strategy. I thought that CTA was like, okay, you go long or short gold based on momentum of some sort. Well, you can do that, but what really drives the CTA industry, I found, is doing the whole portfolio, buying the ones that are moving up the most and selling the ones that are moving down the most, right? So these large portfolio execution strategies are a really dominant factor in the marketplace. And I think that on the lesser traded instruments, particularly gold, that it's outweighing anything else. Surely, though, at some point that correlation changes and surprises them. It's just not today, folks. But like, here's the thing, is that in order for that one to pull through, I think that you would also need to see a decline in the dollar. So I think that part of the problem here, in terms of like why this macroeconomic picture seems to be really complicated to piece together, is that the inflation that we're getting is a global phenomenon, and the US is dealing with it better than everybody else, essentially, right? The US is the what is it, the prettiest cow at the slaughterhouse, right? So when you get something like this, of course, S&P 500, everything got slaughtered, but dollar went up, and everybody just moves to cash because there's like nowhere else is safe. Treasuries are getting crushed. Well, so far, 05 was the highest that we got. It was the higher end of like this apparent liquidity hole. I really wish when I was sitting there and I was like 3.4 that I had decided to try and take one there, because that would have been an easy trade. And then I could at least get $30 out of it and feel good. But we were like at what, 3.2, something like that before all of this. This is just nuts. So we need to come back over here to our volume profile. Do I have, oh, I don't have one up. Okay, so let's fix that. So if we come to daily ZN, and some of these charts still, I don't like. I don't always get them right. Hold on. Indicators, I'll leave you on this screen until we fix this. I need to change that indicator to be default on price change. There we go. Okay, so now duplicate in new tab. And YR. And what did I set this one to? Is ticks? Yes. Okay, so coming in and looking at it, this is not the biggest change in interest rates that we've had this year. There was many days in both June, July, and August that were higher. So let's keep that in mind. There could be more. Well, let's say 3.5 first. 3.5, 3.75, and 4. But yeah, who was it? B, it starts with a B. Bullard. Bullard was saying that he'd like to see interest rates of 4%, right? Maybe the Treasury, the 10-year gets there. So the next thing that we have to think about, well, on this move, we flattened considerably, by the way. Flattened considerably, and about 30,000 contracts puked. Jeez. What a bonkers move. So the issue has still been that the treasuries don't believe that the inflation is going to stick around. They think that it's transitory. Well, they told us that a year ago. This is now the third or fourth time that we were like, oh, it's transitory. We've reached peak inflation, and the market gets surprised by it. And every model that they have keeps saying inflation is going to come down. So like, we got to make a video about this, but I don't know quite how to go about it. This shirt is kind of sitting on my shirt a little weird. I need to fix it a little bit. Wow, that doesn't help. You can still see it. Well, yeah, like the thing is, you got to remember that the retail traders do not trade them pre-market, and yeah, the ES is probably going to have further moves when this opens up. You're surprised the German number was on par. Yeah, but last month theirs was higher. I don't know. They've had it both ways. You know, one of the things that I think really helped with the markets changing its expectations here and moving the way that it did yesterday was that there was the New York Fed survey on inflation expectations, and the public's inflation expectations had come down. Now that you have another really big hot inflation report, does that change the public perception back up to inflation is insane again? Yeah, well, so in the treasuries, you're definitely getting the, like liquidity hole ranging around like the behavior that we would expect. But in the S&P 500, no such support seems to exist. The S&P 500 is just careening down. But you when we're thinking about knockoff effects, so the first one is this is probably going to change inflation expectations. That's not very good, right? How does this change anything about the September meeting? I think that it's still going to be, well, let's go look. What are the chances that we completely retrace this move today are very low, I think. But let's just keep in mind that the liquidity is incredibly damaged. I mean, look at the 10-year treasury, right? They're putting up like 700s now. I mean, there's still a couple of people out there with the balls and willing to do stuff, but a volatility increase like that like really upsets the market makers, right? So okay, that's interesting. Compare. So what I am seeing now is that the okay, get this. Yesterday, the probability of a 75 basis point hike was almost 91%, right? And the possibility of a 50 basis point hike was like 10, no, what was it? 9%. It was 9%. Now today, they're pricing 0% chance of a 50 basis point hike, but instead of 90% chance of 75, they're pricing 80%. And they are now pricing a 20% chance of a whole 1%. So we've got a week before the FOMC, and they're in the blackout period. So you know what our next step is to watch Nick Timoros's Twitter like a hawk, right? Okay, so that was a little bit of a significant breakout that was accompanied by some stacks and other reshuffling in the order book. day of Michael Burry's revenge. Ooh, that's a good call. Has he said anything? No. Okay, well, let's come and read. There have been a couple of tweets here that I've missed. So Nick Timuro says, housing continues to explain a big part of the acceleration in core inflation. Rent is up 0.7% in August. Because of how the BLS constructs its measures of residential rents, a mild deceleration in rents could take several more months to feed through to the CPI. Okay, and Steve Leishman 12 minutes ago pointing out that there's now a 20% chance of a 100 basis point hike. Markets today, the Fed just erased the 75 basis point hike that was written in pencil and wrote it in red ink, says Steve Leishman on the latest CPI data. This moves them to 75 for sure at this point because they didn't get the help they were looking for. And that's all I've got here. It will be interesting to see if Michael Burry says anything. Okay, they were getting a little bit of a pullback, but it's getting shot down, and the S&P 500 is going lower again. He's even more bearish than you. Yeah, he is. I think you're making a good point there. Like Michael Burry, it's going to be really interesting to see what he says when he decides to speak. Yeah, well, I tell you what, like it seemed like a big shift, and there was some big orders there, and now like ever since then careening down back to 115. Uh-oh. Ray Dalio, I observe people making decisions if their odds of being right are greater than 50%. What they fail to see, how much better off they'd be if they raise their chances even more. You can almost always improve your odds of being right by doing things that will give you more information. The expected value gain from raising the probability of being right from 51% to 85% is 17 times more than the raising the odds from being 49% to 51%, which is only a little more likely to be right. I think the probability as a measure of how often you're likely to be wrong, raising the probability of being right by 34 percentage points means that a third of your bets will switch from losses to wins. That's why it pays to stress test your thinking, even when you're pretty sure you're right. Good insight there from one of the masters. Can you believe that ran? Actually, the 10-year yield did not actually make new highs there, so that kind of suggests that these highs that we had here before was a little bit of stop runs. I don't know. Tobias says 1% basis point is not unlikely, but I doubt the Fed will do it in September. That's really hard for me to know at this point. Like, the thing is that this is like exactly like last time, right? Or not last time, 2 times ago. This is exactly what happened 2 times ago. Was the CPI came in hot, and then the Federal Reserve basically had to come in, days before the FOMC and say, actually, we're probably going to do 75 basis points, right? Okay, so that was a strong excursion to the downside. It is pulling back already though, so it kind of looks to me like the liquidity is still really weak, but that was a strong amount of market selling that did come into the markets. It's a nice afternoon today. Oh yeah, of course, because you're over in the UK, right, dude? So like if you go back and watch the video when it came out, I looked at it and I paused and I was like, there's no way that's right. Did I really see that right? I clicked. I mean, as soon as I saw it, I clicked, but then like I was speechless. I didn't know what to say. I could not believe. I could not believe that the market got it so wrong. Because remember I said, well, if I had to make a guess, I would guess that it will be in line. Right? But everybody was making bullish bets. I can't believe. This is just nuts. Just nuts. So here's a question for you. Where do you think the dollar closes today? Yeah, we had similar ones. No, you're right. It's, well, that probably is playing into some of the market action that we're having here, right? Like I feel like we're having a what do we call it? You know, like we're having an episode. We've been triggered. You know, like this has happened to us before, and the market is remembering and is like all down here. You know. I mean, it's not like it's an overreaction though. The funny thing about this one is that in a situation like this, the market is likely to, well, okay, the market always either overreacts or underreacts. It's the reaction is almost never exact because it all has to do with the amount of volume. So are they overreacting or underreacting? I mean, certainly the traders are reacting as strongly as they can. So if, you know, this could be a situation where as strongly as they react, that's still not enough to price it in. But it might be too much. I don't know. Because I mean, I'm not necessarily from the fundamentals. And like honestly, at this point, on this particular point, in reality, we're flying blind, aren't we? Because none of the analyst models on inflation are catching this. They've all been dead wrong the whole time, right? Their models just aren't good enough. So when we talk about those kinds of instruments, we're flying blind. We're just kind of taking it as she goes. You know, like, well, we're not flying blinds. We only have the headlights, right? We're flying in the dark and we only have the headlights. Do you think there is some insider trading going on with this kind of news? I always wonder, there must be people who know these numbers all before already. Well, so I would be very disappointed if somebody somehow had inside information from the BLS on what the CPI number was going to be before it came out. But there is certainly a lot of people that think that they have the inside scoop, or that they can predict it well, and so on and so forth, right? Clearly, though, the majority, at the very least, was wrong here, right? Even if you know, how can you know the reaction? Well, that's hard too. But on one like this, I mean, if I had the number beforehand, if I had the number, if I knew the core CPI at the beginning of trading yesterday, I would have waited until the end of the day and bought as many puts as I could. Absolutely, because there would be no doubt in my mind that the treasuries and the equities would sell hard, and it would probably just be easier to make money off of the ES puts, right? A little bit more liquid and, you know, easier to get the leverage, right? Sometimes you can know. I think where it gets difficult is like, okay, what is oil going to do based off of this? Well, oil took a big hit, right? That one I think is a little difficult to predict. But I think that the oil markets is kind of is an interesting piece to this puzzle, right? Because the oil markets is saying that the Federal Reserve is going to have to keep interest rates high for a long time, and that it is very likely to lead to a recession. and ergo demand for oil will decrease. That's what oil is saying, right? Gonna breach new lows in the 10-year, maybe? They're edging closer. They're edging closer. And it has been, well, it's been about 40 minutes since the move, so this, oh, now this is an interesting one to try and game out. So if I'm a black seller, let's just say I have a bunch of treasuries to sell, but I did miss the initial move, right? Okay, well, I'm going to need to sell some, so I am going to need to wait for the liquidity to recover a little bit. But I'm going to be erring on the side of selling it sooner. So 10 minutes after the top of the hour, could that be a point where we could be seeing more black selling, perhaps? Now, oil is saying Emmy is hurting without that Asia premium and need to pump more to make up. Yeah. I don't know. I've found oil very confusing. Like, I get what you're saying. Actually, I'm not sure I really have a strong opinion on it, just because I haven't been able to predict oil lately. At the beginning of the year, I thought I had such a good investment thesis on oil, and I made a really big winner that could have been almost 3 times what it was, but I got out too early before Putin invaded and all that. But ever since then, oil has been a conundrum to me. It always feels to me like it's moving on its own. There's another new low in the 10-year. An event like this is really difficult for me because my mind is just going off everywhere. Like, I have so many thoughts, and like, which are the ones that are the most important and are going to matter the most going forward. One of the things that keeps coming across into my mind over and over again, though, is that we continue to see high inflation, even in situations where everybody in the market feels like that it should be peaking. So what does that say about the expectations from the 10-year and the 30-year that interest rates aren't going to stay high for very long, that this is transitory and it's going to pass, right? And what happens if the 10 and the 30 really do start to price in now that they're going to have to keep interest rates higher for longer? Like, let's say that the Federal Reserve does push the economy into a recession in 2023. That's starting to look very likely. So they push the economy into a recession in 2023. And then what? Okay. So they reduce rates to bring us out of a recession. Does that mean that they bring rates all the way back to zero? I don't know. I don't know if they actually can. I think that at that point you get it into a recession and then you leave interest rates where they are, maybe. And maybe you just kind of support the markets with quantitative easing instead, or something of that nature. Because, these inflationary pressures, I think, are likely to be around until at least 2024. So, you get what I'm saying? So if the 10 and the 30s start to price higher, that would mean, by the way, steepening, which is not what we've seen on this move, right? I mean, look at how inverted we are right now, especially the 10-year. The 10-year is well below the 5 and the 30. And the 2-year is all the way up at 3.75 right now, which is really like bonkers to think about, right? So what's the higher risk now for Wall Street? Inflation or recession, or is it the combination of both? Well, I think that really the word that you're looking for here, Tobias, is stagflation, right? Low growth, high interest rates, high inflation. It's not good for stock markets, is it? No. Whoa, your power went out? What were, please tell me you were not short on the 10-year. Please please, Lord, tell me that you were not short the 10-year yield. Please tell me you were long. What price did you get? He says he's long. Okay, few. What price did you get? 3.42? Yeah, you're good. The treasuries are still selling off. Some treasuries are still selling off. So you must have taken it long after the news break. I gotcha. No, we're doing good. The ZN is pushing new lows here still. But what do you think? Trend day? I don't know. I mean, if ever there was a day to justify having a trend day, it would be today. But sometimes the liquidity just doesn't cooperate with it, right? Like it is. It's going to be very difficult for the sellers here because of the liquidity. Yes, exactly, Jacob. So I put in when the news hit, I saw an offer up there. So I put a limit order in at where that offer was, and the market rejected it. Yeah. The market rejected it, saying that the price was 33.01. Look at, okay, read this error message. Oh, I can't show you the whole because it has an account number in it, but bid of 33.28 violates high band 33.21. So like the bids had completely pulled, and so my bid was too high and they wouldn't let me take it. If I had placed it as a market order, maybe I would have gotten that. This is why Bitcoin is becoming more... Oh, actually, I haven't had Bitcoin. Well, okay, Bitcoin got crushed, of course. But not nearly as much as it has grown over the past few days. So that's interesting. But if the S&P 500 continues to, sell off in the coming days, which I think is likely, I think that you can see Bitcoin get hammered too. You do have to be concerned about, clearly there was some funds buying Bitcoin this week, right? If they get buried already, that could be really ugly. But at the same time, I don't know. I'm kind of have mixed feelings about Bitcoin because at one hand, it's been very resilient through all of this. I'll put my hand over here. It's been resilient through all of this, but on the other hand, it's not really behaving the way that I would expect. Like with the Ethereum merge coming and everything like that, I would have expected Ethereum to be incredibly strong, and that hasn't really been the case. So that means that scenarios where Bitcoin continues to decline certainly have to be kept on the table. And you would think that if Bitcoin is an inflation hedge, that this would mean that it would be a good reason to buy Bitcoin, but it hasn't been acting that way. It's been acting as a risk asset. Fed funds now seen peaking at 4.27 in April in 2023, up from 4% before the CPI. The market now see the Fed hiking above 4% by year end, so the futures see 180 basis points of tightening over 3 meetings, priced now as 275s and a 25. Well, they're going to be sorting that all day. That does make me think, though, that November will be another 75 basis point hike, yeah. RNC research retweets real wages have fallen every month since Biden's $1.9 trillion stimulus passed. It's true. Your expression face was so funny. I'm going to have to go back and watch it. I think that I want to stay focused on the price right now. But I'm definitely going to go back and watch that and maybe even turn it into a video because it really was wild. It really was wild. You know, funny enough, I would really like to have a Wall Street Journal subscription right now to see what Nick Timiraos comes out with. And I knew that I was getting close to being able to be where I could switch. But my Bloomberg subscription already renewed. So there goes that one. I was so mad about that yesterday. I have not been that mad in a while that I forgot to cancel it. Very disappointed in myself. But it's okay. I haven't been really very happy with Bloomberg's service, but it's not like it was a waste or anything. But if I get an unexpected surge of cash or something like that, I will put it into a Wall Street Journal subscription. Today I got the results of the IQ the university made me take, and apparently I am not mentally fit to even peel potatoes. What? Really? That's funny. You know what? I was reading some more of Nassim Taleb's information on IQ, and I was very curious to me because I was familiar with the arguments that a lot of people, especially when they try and make conclusions about differences between groups of people based on IQ, all of the statistical problems involved with that. But Taleb was basically saying that IQ is not a good measure at all, that it doesn't actually tell you anything, and that they only think that it does because of a misinterpretation of the data. So maybe you're okay. You scored 77. Well, and I'm gonna bet actually that, you know, you have some sort of neurodivergency that maybe, so like for instance, did you finish the whole test? Were you able to answer all the questions? Because what happened to me, or what would be likely to happen to me if I wasn't on medication, is I would do really, really well on what I did take, but I wouldn't finish all of the questions. There's another new low for the 10-year. Okay, so I think, Steven, there you had a little typo, so I'm going to assume that was 48.22. No, that's not right either. You did finish it. I don't know then. That's interesting. That's interesting. But you know what is another thing is that the best futures traders that I've met, or let's just say the ones that I respected the most, they were not people that I came in and were like, oh my gosh, they are so smart. Really, it really seems to me like IQ is not the differentiating factor between success in this game, you know? Like, humility is really important, because the thing that really seems to matter is knowing when you know and knowing when you don't, right? So coming into all of this news, I was really cautious because a lot of people were saying, oh, they're buying into it. And I was like, well, that might not be the only reason that they're doing it. But then there was news that came out showing that the options that people were taking bullish bets. But I was really careful. Like, you'd want to say like, oh, the market really thinks that it's going to be too easy. Well, no, I don't actually know that. And I know that CPI has surprised us many, many times. So why would I be trying to make some big call before the CPI, right? And you can see how it turns out. It was very justified in taking that, right? In other words, I knew that I didn't know, so I just kind of stayed put. Well, we're about 7 minutes before the S&P 500 opens up. Let's pull up our DX feed DOMs now. Pull up Apple. If you guys have some stock tickers that you would like to see, please tell me. We'll watch them. Yeah, I don't know. But the other things, there's different types of intention and stuff. NVIDIA? Okay, we can do NVIDIA. I only want 2 up though, okay? I only want 2. So we'll change this one to be NVIDIA. Oh yeah, that was the first one selected. There you go. I'm really curious to see where NVIDIA goes over the next 6 months, because how are the miners going to react to the Ethereum merge? I'm guessing that they will move. So I think that a lot of the mining that's out there is actually in the cloud, and so a lot of the cloud stuff may just shut down. But I think that, like, especially the hobbyists or the people that have like a whole mining farm with GPUs and stuff, those guys are probably going to be moving over to something else, that or selling their cards. And like the issue is that if they have to sell all their cards, they're not going to get what they paid for them, right? So the GPU market is probably going to get dumped on here in the next 6 months, and they've got a 40,000 series cards coming too, which we don't have the pricing on yet, but it's coming soon. I think this month, right? Don't recall. Getting a little bit more of a pullback here. Copy of the tokens should happen. I'm not sure what you mean by that. I mean, like, maybe you just move over to Ethereum Classic, right? That's why it's going to be a really, I'm not 100% sure what happens with the merge. Obviously, in the long run, that should mean less supply coming into Ethereum. Ethereum still kind of has like network problems, right? And I don't think that this will solve their network problems. But the miners are like a huge part of the ecosystem that support it. So can you really just ditch them all? We'll see. That was two really fast ticks up, but they weren't, it was like, I think it was spreading. I think that they were selling the 30 and the 5 and buying the 10. You see the way that's moving is a little curious. Let's reset things so that I can kind of keep an eye on it a little bit better. But I do not particularly like those moves. This is like a strong market buy followed by a little bit of a dip. S&P 500, at least just here before the open, trying to dig itself out of the hole. You still got, so in ES, it's kind of this interesting situation where you'd expect them to just want to continue selling it, but there's always that desire to gap fill in the ES, right? So two blockchains, one proof of work and one proof of stake, so copy your token on both chains, like when you had a hard fork in between. Oh, yeah, maybe. You're saying that the old Ethereum chain will probably live on, essentially. That would be curious if that's what happens. So yeah, I don't think this is a situation where I have a good probability of predicting what Ethereum's gonna do. Well, I can only say that it hasn't been as strong as I thought it would be going into the fork, and that the bullish impetus that the fork gives less supply is not something that happens right away, right? It's kind of over time that you'll see that probably cause Ethereum to rise. But if that happens, if we get the merge and let's say Ethereum is roughly where it is now after the merge, and you see Bitcoin continue to sell because it's a risk asset and the S&P 500 is selling, that could be very disastrous for all those people that bought into Ethereum, right? Meaning it's just that much more ugly when it starts moving down. By the way, Jacob, $20. He gave us a $20 tip. I appreciate it, dude. It did. Thank you. Oh, is that what that's for? Is for the Wall Street Journal? Okay. I will make sure to start a monthly subscription for the Wall Street Journal. Oh, I'm so mad. It's such an ADHD thing. I thought that I knew that I had started my Bloomberg subscription in September, October, something like that. So like I go and I check it, and turns out that was like the very day that it renewed. And so I went in and of course I canceled it, and I was like, hey, this was not supposed to process, and I'm like, well, sorry. They were kind of assholes about it. I have to say, I was very mad. I was like, I couldn't walk straight mad yesterday about it. So this is like $400. And I was going to put it into a Wall Street Journal subscription, but I was probably going to wait. I was probably going to wait until like January, and because of maybe buy a new video card. But now I'm going to have to save or put it on credit. I guess I could put it on credit. That's fine. He asked me to tell you before the market. Okay. Oh, yeah. It's okay. So you're going to take a trade in ES right now. Okay. This it looks like as good a point for a long in ES as any, that's for sure. I am seeing this is one of the stronger pullbacks that we've seen in the treasuries, particularly in the 30-year. Went back to 114.30, 10-year. There is some signs that the liquidity is just still weak here and that they could very easily come back to lows. So we just kind of have to watch it and see what happens. The 5-year is definitely moving much more dramatically than the other two. Oh, come on, center. There we go. Omir Sharif says, interesting to see some chatter about health insurance was up 24% year over year in August. If you think that's a big deal, buckle up for where it's headed. Twice, but 3 times your tokens. I'm serious, it might happen. The Ethereum market is so weird and complicated. Yeah. Well, at the moment in the S&P 500, I would say that it is a tough ride at the moment, but they are buying it. And I am seeing a lot of volume trading in Apple. Although, I'm having some problems with my DOM here. I don't think that that's right, because it's showing me a bid above all of the offers, so that can't be right. There we go. That 800 must just be left over. It didn't get the cancel message for some reason. You see how strong these, how much is traded in through here though. So let's just say that the stock traders are very, very active this morning. Now, treasuries were kind of giving a hint that that leg was maybe over, but now they're continuing up a few ticks again. Look at that. Doesn't take many contracts to do it either, does it? This is kind of a tough spot in the treasuries because, you know what? Maybe this ends up being like a good swing spot. Like maybe you could just hold this until the end of the year. You know what I mean? But given the liquidity conditions, the chances of pullbacks are still, you know, frustratingly high. And every pullback that we've had here on this move lower has been more than I expect. Although the move when they moved lower and we were almost $40 in the money at one point was also surprising to me. So okay, well, I guess we are going to be hearing from an ECB speaker here. I don't have anything else today, do I? Oh, well, we have a 30-year bond auction. Oh, boy. Have to say, this pullback in the treasuries, very strong pullback. There was pulling the whole way. It did not take very much at all to do that move. It's probably being driven by correlations. I do see that the Japanese yen pulled back considerably as it happened. Oh, you were invited to an event. Cool. I don't know. I'm just not as interested in cryptocurrencies as I used to be, Anthony. I find it hard to remember to update my Patreon with my model, even though the model still seems to be working really well. But just like I really hate fraud. I think that I get triggered about it because, you know, we had this whole spiff with another creator who was selling a course that I don't think was really worth their money, and he's calling people frauds, and like I'm going around and I just see all these people making all of these extravagant claims, and you know that everything that they're saying is total BS. And I just see the fraud everywhere, and it just makes me so mad. And so when I started to see it really take off in the summer of 2021, you know, it just really made me mad, and it just makes me want to not be involved in Bitcoin anymore. 2-year yield and 20-year yield are both 3.7, with the two up 4.6% today alone. Well, that's interesting because when I look at ZB is only down 0.57%. But that's not really an accurate measure, huh? But the spreads are really odd, right? It's so weird to see the 2-year at 2.75 and everything else hanging out down here, and the 10-year having trouble getting even above 3, even getting to 3.5, right? So you got to remember, when I took this trade over here, the 10-year was all the way up at 115.04 half. So yields are fighting it a little bit to some extent, huh? In fact, are we going to give up all our profits? Really? on this move because it seems like such a tiny move back up. Not sure what to do about that one. I think I just kind of have to hope that I can hang on and that it pushes lower, continues to push lower. It's only been 8 minutes since ES opened, so but we are seeing ES starting to push down. They made a valiant effort at the beginning, but they did not get very far, did they? So far, it seems like that ES has been a better trade to go short on, huh? Yeah, the curve, the curve seems so messed up to me. Like, so to me, I think that the move here in the yield curve, or not the move. Like, I'm not saying this is a trade that you should make, but I'm saying that what I would expect to see, based on the fundamentals that I'm seeing, is that interest rates are likely to be higher for longer, and that should increase yields on the longer end of the curve. But at the moment, we're not seeing that. The 2-year moved a lot more than the other instruments. And now here in the aftermath, the longer dated yields are fighting it quite hard. See, look at that. I guess it has been since the lows about 7,000 contracts long. Yeah, the short end is the one that moves, is true. Especially when it comes to yield. But I just don't think that steepening is the right move for this one. I feel that at some point the longer dated, the 10-year in particular, has to rise. The 10-year yield in particular has to rise at some point, I think. And it just continues to resist. Like, you'd think that if there was ever a move that would really cause those guys in the 10 years to really give up, you'd think it'd be this one, but nope. Nope. The expectation is fundamental mid-long, and the far move on expectation on cost of capital or availability of capital. I don't know. Isn't the call here them saying that it's just like in 10 years that the treasury yield is not going to be 4%? Do you day trade? I do. We're trading the treasuries at the moment. We had a trade that worked pretty good, but it's kind of not cooperating at the moment. I mean, I guess the yield curve is steepening a little bit on this pullback, but seems to me that the 30-year has been leading this one, which is why my trade came back so far. And while we do get some good ticks to the downside, they don't seem to be having follow through. Like that one right there is pretty good. I bet you they can probably trade back down to 115 even. Sure, okay. But then are they able to really like catch momentum and start trading back down through this? Is the question. I guess if you're a black seller and you still got treasuries to sell now is probably your best chance. How's the S&P 500 doing? Well, they were looking really ugly for a moment, but they're actually seeing some bullishness over there at the moment. 1500 at 31, huh? $18 to clear. And I'm seeing continued flattening. The 5-year is driving this down move. Maybe the cynics are saying that this just means that we go into a recession sooner. And that the Federal Reserve has to back off sooner. The only thing I want to know now is for the euro dollar to trade with a sub 90 handle before it delists. Oh man, dude, the euro dollar like turnover is turning out to be like quite messy, isn't it? There you see, there was some good movement to the downside, and then they only took a few contracts to smash it back up. You're probably seeing a lot of profit taking here, and the market makers are just basically making them pay up for it. No, I understand what you meant, the euro dollar. Yeah. And I don't know what, like, I don't follow the price of it to know that, like, what a sub 90 handle would actually mean, like, on a technical perspective or anything. I just know that they're switching over to SOFRs, and that it's like you couldn't get a more interesting and bizarre market to be doing that in, right? And I really wonder how much that could be affecting the prices and market pricing mechanisms that we get, that, you know, the SOFR switchover might be causing like some quant strategies out there perhaps to misread things, you know, because that's going to be a significant input to a lot of models, won't it? Now, I'm still seeing some iceberging on the bids. Oh, you have to tell that because people, yeah, you knows that I understand, but probably nobody else in the stream. Well, NVIDIA is quite turbulent here. Look at that. Yeah, the 10-year having difficulty getting back below 115 even. But I would say it actually has been quite flat price-wise in this area, so I don't know. I'm on the lookout for more block sellers coming into this market. I'm not seeing it. I do see passive buyers though that might be profit taking. Two biggest ones are SOFR, daily compounded, ED is linear, and ED is averaged over 1 quarter. SOFR is averaged over 6 months. Huh. Oh. Oh, euro dollar is linear and euro dollar is averaged over 1 quarter. SOFR is averaged over 6 months. I see. I need to read that book to understand why that's significant though, huh? Why that changes things. E-mini trying to dig out again. So you'll see the front month on SOFR being 2 quarters ahead. Well, looking at things, the Treasury is starting to look pointed to the downside, just price-wise. This pullback seems to be very correlated across the board with the Japanese yen, probably the strongest factor over there. Gold pulling back significantly. Actually, the pullback in gold looks like really big. Almost everything is down across the board, with NQ, the biggest loser today, down 3.25%. And that is new swing lows in the Treasury. I guess we'll see how far they can get this time. There was some block buyers in there, but now they've been pushing through that, slicing through those bids quite easily since then. Although it's probably like that on both sides. We'd like to see some iceberging on the offer, right? Well, 1194 isn't bad. I'm not really seeing a drop in the Japanese yen yet. That's what would really help if we were going to see new lows in the treasuries, right? Yeah, this makes the next Federal Reserve meeting really interesting, right? You know what's funny about all of this is that I was definitely rooting, if I'm honest, I was rooting for this report to be bad, because I knew that everybody was betting on it this way. So it's like, well, if the report is bad, that'll be better for us, right? I said that before the news came out. But I thought I had gamed out in my mind what all of the consequences of that would be. And I don't think that now that it's happened, I don't feel like I have. It feels so much more significant than what I was planning for, you know? Especially, I gotta say, for the Biden administration, we haven't talked about the political consequences of this, but things were looking up for Joe Biden for a while there. And I think that a big part of the improvement in his rating and everything had to do with inflation cooling off. And if inflation is heating up again, and then especially since you're exhausting the SPR and everything, like this really starts to look bad for Joe Biden at some point. Even if he's able to handle the midterms, like what about after the midterms, right? Because a lot of people were saying that, oh, well, they're doing all of these temporary things that are kind of making numbers look better for the midterms, although I don't know what those things would be. I think that a lot of this is just conspiracy theory nonsense, saying that they don't like the numbers, so they must be fake, right? But you know, I do see possibilities of things getting worse after the election with the winter and problems with energy in Europe and so on and so forth, right? So, you know, it's like the Democrats could get shellacked in November, and then for the next 2 years, it could just get even worse and worse for them. You know what I mean? I suppose if we're going to have a recession in 2023, though, that maybe we'll be coming out of the recession by the time for the presidential elections. Maybe. Yeah, so once again, I'm seeing like, I like the downside, but it's kind of struggling to push down. And I'm not seeing the 6J come with it. Yeah. Let's see here. What was Jim was... what did he tweet just before the CPI? The current inflation could be short-lived if... Oh, yeah. That we already read that one. That could be why it's just continues to be persistent, is because of all those things, like how much money we printed. I haven't seen a model to explain like the different factors and prove how much they actually are being a factor in here. But sure seems to me like that the financial world has some work to do, yeah? I mean, like, I wish that they had done that work like a year ago, but now you really don't have an excuse. Like, now you really got to be saying, okay, we got to figure this out because our predictions of inflation just keep being wrong. What are we going to have to do to put a stop to this? Well, the treasuries are giving us a nice zigzagging pattern here, aren't they? Whether that results in another downside move is yet to be seen, because while it is going down, I'm not necessarily seeing a huge change in the cumulative delta either. So again, I'm still looking for like signs of block selling. Not seeing that. Although the 6J is starting to turn down a little bit, and Bitcoin is starting to push to its lows again. I feel like that of all of the assets, that Bitcoin was the one that like held up the best. Like, I would have thought that they would have gone straight to new lows, like below 20K, but they're at 21,240 at the moment in Bitcoin. So does that mean that Bitcoin still has room to fall further? We'll see. Oh, is Biden speaking? Okay, Biden is speaking on inflation at the moment. He's saying that it will take more resolve to bring inflation down. Of course, he didn't say it like that. Maybe I should do all of his speaking for him. I can do it in my big, you know, announcer voice. I can't do a Joe Biden impersonation. The way that guy talks doesn't make any sense to me at all. Donald Trump, that one made sense, but I think he's ADHD. But Joe Biden, I don't know what his deal is, man. sometimes hearing him talk is just like, how did he become president again? Well, I know how he became president. What do you guys think? How do you change this sort of thing? This is something that I think about often when I think about like my beliefs about the world and politics in particular. This is the one where I run into a dead end. Is like, it seems to me that the person most likely to become president is just the people with the most accumulated power over time, and that's why you end up with old people. So of course you could put a cap on it on age, but that still means that it's just going to be the most popular people of that age that have the best name recognition. How do you deal with the effect of name recognition in politics? How do you even the playing field? Because I'm thinking that name recognition is becoming a really big problem, preventing the most qualified people from being in office. Right? It was kind of like the idiocracy sort of a thing, right? It's like the person that gets put in office is not the person that's going to be the best president. It's the person that's most popular. Term limit, well, but it's still the guy that gets in there. You can shift them over more. Well, term limits for senators, I definitely think has to be a thing. You know what can I say on term limits? So I definitely agree with people that there should be term limits. But if you're one of those guys that are in favor of term limits, can I make a plea to you? Please, 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 bring down your ask. Okay, like I'm seeing them say like they should only be allowed to be in the Senate for 4 years. That's not enough time. Let's say 16. Okay, I think that you shouldn't be allowed to be in the Senate for more than 16 years. Okay. Like temperate, because you do need people in there that have been around for a long time. It takes time to learn how to be a senator, and 4 years isn't enough. Okay, so I think one of the things that's undermining that movement the most is that the term limits that they're asking for are too strict. Give that one a thought if you're in favor of term limits. I think it would help if the bills that they were proposing were you know. Maybe you can have 4 terms as a senator. That makes more sense. We let a president have 2 terms. Why can't we let senators have? I think that senators should be around longer than a president. Well, that's just me. Okay, so this thing from Joe Biden, it wasn't a press conference or anything. It was just a statement that came out of the White House. So I guess we can read that. Today's data shows more progress in What a fucking joke. The first 3 words, and I'm already like, what a joke. Okay, today's data show more progress in bringing global inflation down in the U.S. economy. What a load of shit. Overall prices have been essentially flat in our country no, that's not true. Of course, CPI is increasing. The only reason that it shows that is because gasoline prices went down. Okay, that is welcome news for American families with more work still to do. Gas prices are down an average of $1.30 a gallon since the beginning of the summer. This month, we saw some price increases slow from the month before at the grocery store. That's not true. The inflation in the grocery store was higher this month than last month, so I don't know where they're getting that one from. And real wages went up again for a second month in a row, giving hard working families a little breathing room. Is that true? Well, remember we were seeing those tweets earlier that were saying that real wages have just continued to decrease since Joe Biden's plan, but I'm gonna have to verify that one. It will take more time and resolve to bring inflation down, which is why we passed the Inflation Reduction Act to lower the cost of healthcare, prescription drugs, and energy. Okay, well, no, you did it. You did it as a gift to the green movement. I guess it does help with healthcare costs a little bit, but we're certainly not seeing that in the CPI yet, because that was one of the biggest gainers was medical costs. My economic plan is showing that as we bring prices down, we are creating good paying jobs and bringing manufacturing back to America. I'm not seeing that one either, because the manufacturing, so services has been improving, and over the last month, I think that's why there's been some bullishness, but manufacturing has been dismal. And with the big jump that we saw in the dollar today, that doesn't help manufacturing either. This is one of the most tone deaf, ridiculous statements from a office holder I think I have ever seen. This statement is a total, and here's the problem, okay? Yeah, it's politics. I know we don't like talk about politics, especially like if you're a Democrat, you're probably not very happy right now, right? But the problem is that this inflation is very much a political problem. And I think that there's a very good case to be made that a lot of the inflation that we see has to do with government policies and not monetary policy or any of these other things. Of course, there's a lot of other things, especially like deglobalization is a really big factor here right now, right? And of course, they don't necessarily have anything to do with that. But so to see the president come out with a statement like that, that's so inaccurate, does that help expectations, inflation expectations? No, it doesn't. So you just saw a press release there that my reading of that is that's a slightly inflationary press release. Is that fair to say? I'm very disappointed in that statement. I'm gonna tweet that, man. This is like, retweet with comment. Well, that was a pretty good downside excursion there, but they did not that time make a new swing low. Think those price action people would be buying it here, yeah? By the way, Tobias, were you able to take anything out of that long that you took? Because it did move up a little bit for you, yeah? Yeah, right back to 30 very quickly as well. Seems that we've got a liquidity hole at 30 and that they are having a hard time pushing further at the moment. How are we on the deltas and everything? Okay. So we're back to about where we were at 9 o'clock cumulative delta wise. So, which is about as long as we've been in this trade, right? Oil, man, oil is all over the place, isn't it? Oh, what's this? Carl Quintilla tweets, we now expect Goldman, quoting Goldman, we now expect a 75 basis point hike in September, followed by 50 basis point hikes in November and December, which would take the funds rate to 4 to 4.25 by the end of the year. I'm at Hatzius. Okay, so that's interesting. So they're saying, yeah, it'll still be 50 basis point in September, and it'll still be 50 basis points in November, but then in December, instead of 25, it will be 50. That's their change from what the expectations are. I wonder if that becomes the base expectation of the analysts or what. Well, although we take that with the caveat that basically every expectation that has been made this year as it concerns inflation and interest rates has had to be revised higher over and over and over again, right? So who knows? Maybe October, inflation really high. November, inflation still really high. And so November ends up being another 75 basis point hike, if not 1%. Could happen. I think that this piece of news in particular runs the risk of causing inflation expectations to start decoupling again. Although I would still maintain, and I've said this many times before, that I think the thing that really starts to decouple inflation expectations is when they do the like yearly bonuses and companies start giving people 5-10% raises, right? That's when people will start to go, well, this might go on for a while. Do we need to make a TikTok about all of this? How's this TikTok going to go? It's going to be like this. It's going to be like, guys, I've told you 1 trillion times before. Do you finally believe me? Markets are not informationally efficient. People will tell you that the market already knows it's all priced in. That's total bullshit. We saw here this week traders putting huge bullish calls, expecting inflation to run under the expectation, and they were dead wrong. We saw the indexes slashed, interest rates rose dramatically. You cannot look at what the price of the market and assume that that is a accurate reflection of the fundamentals in the market. It simply isn't. All it is a reflection of is the orders currently going into the market, nothing more. This is, and this should be, of course, most people aren't paying attention, so they're not going to hear this message. But this event should be the final nail in the coffin to say, yeah, the markets don't know what's going on, and we don't understand inflation. And all of these models that keep saying that inflation is going to cool off and come back to target and everything. It's noise. You can't read anything into them. We need better models. Until we have a better models, we can just ignore everything that the analysts are saying about this. Unless the analyst says, well, here's what our model says, but we know that my model is wrong. Right? Okay, Papyrus IQ tweeting here from Reuters. U.S. Secretary of State Blinken spoke overnight with Armenian Prime Minister Pashinyan on military actions along the Armenia-Azerbaijan border, according to the State Department. What says James E. Thorne? Think about this for 1 minute. Basically, no inflation month over month for 2 consecutive months, and even Goldman loses it. Message: we want deflation now. No, this guy is talking out his ass. Core inflation is too high. You can't come in and say oil came off of record highs, so now it's deflation when everything else is still going up. No. Nope. Well, maybe they're going to try an up move here in the treasury. The 6J certainly looks pointed in that direction. Well, I think in this position you have to wonder. We haven't talked about this a lot, but what do you guys think about the 30-year auction? Because the 10-year auction was very ugly yesterday. That doesn't mean that the 30-year auction has to be terrible, but like, who wants to buy a bunch of treasuries here? Right? Okay, Blinken urged Azerbaijan, also spoke with Azerbaijan president and urged him to cease hostilities. I need to do a little bit more research about that Azerbaijan conflict, because I'm seeing, oh, like there could be another front in this conflict, proxy war between Russia and NATO. Is that actually the case? What are the geopolitical implications of this? I don't know. Buy the 30-year at auction, offer them in the repo. Okay, offer them in the repo market, take cash, and then buy the 2-year from the open market. What? Well, why would you want to buy the 2-year in that situation? What if the 2-year yields just continue going higher? Like, isn't the 2-year yields destined for 4.25 now? They're at 3.75, but like, you get what I'm saying? I don't know about that one. Although bonds can do some weird things. So I was reading this story yesterday where they were talking about like junk bonds, and they were saying, well, you know, there's going to be a lot of bonds, and like especially municipal bonds, that look like really, really good buys here. But if you buy it when it's below par, you have to pay taxes on the money you make from it going back above par. So your actual end of profit on it actually ends up being not that good. Higher total return, take cash from maturity, call back the repo. Okay, so actually with the trade that you're talking, because I don't think I completely understand it, what would be the big risk to that trade? What would be the move that would really screw that over? And how much would you ever risk in that situation? Or do you think that this is like a pure arbitrage? Well, equities have been going sideways here for the last 20 minutes or so since that push down. Treasuries too, just kind of going sideways. I've seen this many times where the treasuries kind of middle around in here, and you get really frustrated by it, and then they fade much later in the day. I'm concerned that might be what's going on here. So like, I remember one situation in particular where it looks like a market maker got really screwed and ended up with buying more contracts than he wanted, and he had to puke them in going into the close. Then wasn't there that day earlier, was it Monday? That was last week. had to have been last week, like maybe Wednesday or something, where at around, well, like after lunch Eastern time, the treasuries fell down really hard. That's happened. 30-year bond price rallies more than the total return on the 2-year. Oh, I see what you're saying. Interesting. But isn't that the thing that's likely to happen? No, wait, it's not. It's not the thing that's likely to happen. It is. I'm not going to say that it's like likely, but it is a scenario out there, right? 30-year bond price rallies more than the total return on the 2-year. If we go into a recession, could you see 30-year bond prices rally? Yeah. And if that happens, if we went into that scenario, which some people do seem to be betting on, I think that the 30-year would be where you'd see that action, right? I don't know. I'm not sold on it on this strategy actually. Sounds smart, but it sounds kind of scary to me. Well, we have settled into a true zipper here at 30-30 half. And you know what? The liquidity is, it's 1400s out there now. So, I mean, if people wanted to sell again, like, the liquidity is there. I feel like I'm trying to convince them out there. I'm like, I know they're listening. Come on, here's your time. Let's do it. Nothing's you do hard on yourself, actually. Maybe you just got off on the bubbles. I don't know. I would think that I would have an IQ slightly above 100, but I've never taken one and I have no intentions ever to do so. I'm not so sure that IQ really means anything anymore. Like, like where I'm at right now is I feel like I'm feeling the pushback against the machine learning revolution. It's like we've put all of these machine learning models into practice. Have they actually made the world better? So it seems like in many cases, machine learning models can be very, very effective. But, you know, like what they've done to social media, I feel like they've made it worse. I don't think that the machine learning models have been the best for human happiness. Maybe they're the best for the bottom line of companies, but not for human happiness. And all of these models that we have for economics, what good are they? They've been dead wrong on the one thing that matters right now. At what point do the people in charge start to question the reliability of the information that they've been making all their decisions off of? Well, that is a little bit of a move higher in the treasuries. That's probably the best they've been for about 45 minutes now, an hour or so. But I still see something kind of like there's not that much interest in the market. When it ticks, I see polling either way that it goes, and it's just kind of slicing through it. So this still kind of looks like noise in market making to me. Okay, so tell me something. You seem to, like, you understand this machine learning stuff. To me, they seem like a very large number of vector and matrix calculations, or is it something more? So, in generally speaking, yes. The way that machine learning is done in practice is a bunch of vector calculations. Now, the reason for that is because they're doing a large number of multiple linear differential equations, essentially. So it's calculus. It's calculus where you have like something that's like 100 rows and you calculate what all of the different variables are, right? And then once you know all of the different variables, then you can calculate this other thing. But I mean, there's so many different applications from that I don't think that it's simple enough to say it's just vector calculations, you know? And in particular, when it comes to machine learning, the things that make the difference have a lot more to do with like, what is your optimization function? Like, how do you tell it that it's reaching its goal? That's particularly difficult, especially in trading where, you know, you can't just go off of win rate or, you know, how much money it makes, because that might make your algorithm optimized towards a fat-tailed strategy that blows up in your face, for instance, right? So there's all these big differences between models that are like reinforcement models and all that sort of thing. So machine learning is an interesting, because it's a much larger field than I think people realize. Like I probably could have spent my whole career just studying machine learning and I would still feel lost. And that's the thing, is that because we've made these machine learning models, you know, there's a model and then you can say, okay, you can try and apply this model to your data and see how it works out, right? And they make it really stupid simple to apply the model. So there are a lot of applications out there utilizing machine learning today that the people writing this don't really know what they're doing. They don't really understand how it works. And there's also a very wide, one of the things I've found since I've started speaking to people in the industry is that one of the most common things that happens is a business comes in and says, okay, well, we think that machine learning can help our business. And they're never able to actually realize any gains from machine learning because they're never able to get their data pipelines clean enough to even get good data, right? Let alone be able to figure out a model that really works and helps them in their business. So there's actually a lot of money being wasted on machine learning to some extent in the US. But I'm more concerned by places where machine learning has been implemented and it's maybe not as effective of a solution as the people that wrote it think. Like here again in Facebook, what I think is happening in social media is you've got a model that's basically over-optimized towards one metric to the detriment of everything else. They've optimized towards engagement. So like you're seeing this in TikTok, they're changing the TikTok algorithm because it optimized towards engagement and entertainment, but they were finding that they weren't making very much money from that. The things that got people addicted to the app weren't making them money because businesses couldn't make money in that environment, right? So it was optimized towards engagement rather than generating enough profit for TikTok itself. And then let's say that they get to the point where it's making the maximum amount of money for TikTok itself, but then like maybe that's so bad for the user base that they all just disappear, right? Like it's this really complicated world, and I see a lot of people pretending like we understand it all perfectly, and we don't. We're just our society. I say because I'm like, am I about to say something profound? Am I saying something completely accurate? Seems to me that the biggest weakness in the worldwide society at large is that we're not very good at knowing what we don't know. And we continue to push forward telling everybody that we do, because you kind of have to fake it to make it sort of a thing. So you just come in and you say, yeah, I know everything, and yeah, this will totally work, and the science is final. All of the scientists agree, and all of these sorts of things, and then we end up being wrong on major issues. And we do this over and over and over again on big major issues where it ends up being a big problem for us, right? So again, what point does society decide to be humble on this stuff? Maybe it will never happen. Maybe it's just the nature of humanity to do that. But it traces back to this thing that I've complained about here. I lament, like, every time that I talk about it, I really do feel kind of like a baby, because, like, you know that I'm complaining about it because I feel like that it hurts the channel, right? But people seem to be interested primarily in status and indicators of social proof, like obsessively so. And I feel that in most cases, that's not what you should be looking for. Like, if you want to get rich, I don't think that the rich people are necessarily going to tell you how to do it. Because one, if they have something and it's working for them, why would they want to introduce new competition? But then even if they're just being altruistic, the next wave of people that make it big aren't going to make it the same way that the last group of people that made it big did, right? They're going to have to identify new opportunities. So really, looking for social proof is useless because you need to go into things that nobody knows anything about yet, right? So really what you need to do is you need to look for things that are like information that can be proven, and opportunities where you can take that information further on your own. You really have to understand things. So for social proof doesn't help you do that, right? You need empirical evidence. Empirical evidence is what helps you do that. So there's been a couple of like downticks and stuff here in this range. It's kind of getting to the point now where like every tick in the treasury seems significant, but it hasn't broken out yet. Maybe they're about to do it though. Let's see. There has been a little bit of selling through this range though, so a couple of bid icebergs taken out. So we are seeing the volume kind of come down to the downside. But that might just be like market makers understanding that and keeping the price diffused enough that they can make money off of the range, and that we're not actually going to be going anywhere significant. And maybe if this does continue, like if rates do rise more, maybe it doesn't happen until much later in the day. Maybe it doesn't happen for a few days, even maybe. Wouldn't be the first time where we've had a significant piece of news like this and then like it retraces it the next day anyways before going lower. That happens all the time. By the way, what time is it? Oh, 8:30. Okay, so we got 30 minutes left still. One thing I will note is that the 30 years come a little bit more in line with the others, so that helps. Twitter whistleblower Peter Zatko says Twitter employees were concerned that the Chinese government could collect data on users, says hearing. Well, why would that matter when they have TikTok? Now they know literally everything about you. Guilty. I think that the CPI knows Sept very well. I don't know if they like what they see. There you go. Pavel Global Macro tweets, and it's the core that the Fed cares about. Absolutely. Something that drives me crazy is that people will prefer to talk about the yearly inflation rate rather than what the month-over-month number was. Because for us trading, the month-over-month number is the one that you really use to trade off of, right? Well, it looked like for a moment the treasury looked like it was going to break out to the outside and then back to 30 again. It's 55,000 a lot. Okay, so here's an interesting one for you, Akshay. SOFR futures before and after CPI terminal rate sometime late next year and above 4%. So in March, they're still saying. But this seems to suggest that they do think that it will go higher now. Higher than 4%. Okay, well, they tested the upside. Now they're testing the downside. Will it break out? I'm going to go out on a limb and say no. It's just... No, there you go, 30. Yeah, it's stuck. It's stuck, man. The treasury is stuck in the mud. It's just this slop. Just think about like that liquidity is like a big sloppy muddy mess. You know, like you ever done like Tough Mudder or whatever? You ever heard of that event? You know, this isn't like big sticky mud. This is like it's actually a lake that just looks brown. That's what kind of liquidity that is. Nothing to really push your foot against and gain traction. No, yeah, I said earlier. Did I say late next year? March. It's peaking in March, is what the SOFR futures say. Hey, you know what? Like this graph actually I think is not too crazy. So like they get to 4.2% and then maybe they have to back off. But they don't back off below 3%. I think that scenario makes a lot of sense. I don't see the scenario where interest rates go back to 0 or even to 2%, which would be like the longer rate target or whatever for inflation, right? Nah, I think that they're still going to have to be somewhat restrictive, even if they do have to ease things a little bit. Oops. Oh, you're right. Terminal rate sometime late next year and above 4%. I don't know what they meant by late there. March. Let's see here. That Martini. So I'm seeing a Twitter conversation. This is Bitfinex retweeting this. That Martini guy, I don't give an F about CPI data. Why would I want to sell my Bitcoin? Because inflation is happening. The whole point of Bitcoin is the inflationary system sucks, so let's use a deflationary one. No. Okay. I don't think that anybody that ever bought Bitcoin said, oh, well, we should have a deflationary currency. No. She's taking the baby. She's taking one baby and not the other. But I don't have to hold him because he's sleeping. When she walked in, I'm like, no. I'm in a trade. You know what's funny is they kind of did break out both sides and then they went back into the zipper and they're stuck at 30 again. Let's see here. And then somebody responded to this guy. Yeah, I just bought it up 3 hours ago to help me shill Bitcoin to dumb retail, but now I don't give an F. And they're... Oh, and he was tweeted something earlier that the guy had said CPI inflation data today, expected positive news could cause Bitcoin price spike. So he was saying, buy Bitcoin before the news, and now that it comes out, oh, I don't care. Oh, what a douche. What a douche, man. He got caught. He got caught big time. Mohammed El Arian. Mohammed A. El Arian. Last week, Fed officials signaled more constantly that rates would go higher, not just for longer, but also in a faster way. Today's hot inflation numbers, both headline and core, reinforce that likelihood and make a third 75 basis point hike, historic in several ways, a done deal. Well, the micros are fluctuating a little bit too much in this range for my comfort. 30-year is pushing on the upside here. It looks awfully dead, though. Like, honestly, it just looks awfully dead. Morgan Stanley, this month's print does raise the difficulty for the Fed to manage an eventual step down in the pace of tightening from 75 basis points to 50 basis points and beyond, which we expect to happen by the November FOMC. Oil futures extend losses in volatile trade. Brent crude down by $1 a barrel. Oh, yeah, they just pushed to new lows, didn't they? Ouch. Ouchies. That might have driven... So this little rise up here might not have been market making, pushing to the upside. That might have been them accounting for what just happened in oil, which is maybe why it flattened more in the 30-year pushed up higher. I've seen that before. There's somebody who was tweeting about how's that inflation going, and they showed this video of like it's a little kid playing in a football game. You know, like they do like that charity thing where the kid gets to do one play or whatever, right? And so it's like he's broken out. He's gonna go and make the touchdown, and everybody's cheering him on. And then he's getting close, and this guy from the other team comes out of nowhere and just drops him on the ground. Is like over him and is like all taunting him and stuff. It's funny, but I have seen that before. A little bit of a breakout. There was 39.98 at 1500. I don't know if I can make anything out of that because you do tend to see big orders at those even numbers. At the moment, it's kind of hinting that it's going to fall back down to the 30, but we'll see. We shall see. Don't they all say that? Deflation, Bitcoin drops, get to buy more for cheap. like this is the thing is that seems to me like there's a bunch of bag holders from this week in Bitcoin that have yet to puke. Right now, I think they're very lucky that it hasn't been worse than it has been. But like they're still pushing the lows. It's just been very gentle. But look at the S&P 500. They're now making their way towards 40K. So 40K might be a point at which the gamma dramatically shifts. So we got to be careful about that one, right? Well, we got about 15 minutes left. Let's go and see. I didn't read Zero Hedge through any of this. Tucker Carlson obtains Department of Justice subpoenas targeting Trump allies. Comments this is a full-blown political purge. I've been hearing about that, but this is the first time that I've heard about that in public media, so. Consumer prices blow away expectations and rise for the 27th straight month. How are you doing? I'm going to say not bad. I could be doing better. I could be doing better, but not bad. Could be doing better, but not bad. I tell you what, that release was just about one of the most exciting things I've ever seen. It was something else. It was definitely something else. Well, I have a trade on right now, and it's just not quite moving the way that I want. Like, look, they're coming back to the 30. They're back to the 30. But I would kind of like to see them revisit the lows of the day. But it's not happening. We've been in it for a while. I don't know. Maybe I can swing this. We'll see. Who is on the other side of those 1.5 trillion in energy derivative margin calls which Europe is bailing out? I would love to read about that. Oh man. Okay, so Zero Hedge's headline off, just like their CPI one, was hot CPI sparks market turmoil, 100 basis point hike odds spike. They didn't say how much, but it's 20%. There's 30 again. Yeah, and then just before that, they have CPI needs only to meet sufficient concern tests for a big Fed hike, because again, everybody thought that it was going to be below expectations. I just can't reiterate this enough. I have never seen the market be more wrong about something. This is, and yeah, the S&P 500 dropping nearly 100 points, like just immediately off of the piece of news, hardly any pullback and continuing to push lower, heading towards the 4,000 mark, which will be a 170 point decline. Oh yeah, was today not a good day? No, today was not a good day for the S&P 500. I don't even want to look at my 401k today. Like, it's going to be a bloodbath in equities, right? Look at Apple right now, the upper left-hand corner of your screen. Like, the bids are just complete. Did you see the bids drop 3 ticks on nothing? Like, the buyers are just completely gone. So everybody wants to sell. It is a complete disaster. Complete disaster for equities. And for treasuries too, quite frankly. It's just that treasuries have been pretty flat since the initial move. Treasuries, as of yet, not doing the we're going to trend all day thing. Let's see here. Brett Kenwell, not to get ahead of our skis by any means because it's a long way down and this is our number one of the current move, but the 161.8% downside extension comes into play at an interesting area if the selling accelerates in a meaningful way. Yeah, nobody cares about that shit. He's talking fibs. Hey, poo-poo on your. You know what I've been thinking? So remember yesterday we were talking about what should our next video be? I think that the next video is going to be me shitting on price action. Yeah, I think that's what the next video is going to be. I want to fight. Let's go. I'm tired of everybody being wrong all the time. It's time that somebody start to call the reality. Start bringing everybody back to the ground and help us realize that we don't know shit. And that's not to say that I don't know anything, but what I do know is that we don't know shit. What the heck? Okay, so Elon Musk just tweeted. He has changed his name to Nautius Maximus. And all he tweeted was the popcorn emoji. All he tweeted was the popcorn emoji. And his name is Nautius Maximus right now. This world that we live in, folks. RNC research already hitting Biden now. Last month, Biden claimed there was zero inflation. Do you think that this month he's going to claim that there was zero inflation too? That was, well, it was a 0.1, so that's almost zero inflation. Dude, the core number is killing us. Okay, Forex Live just tweeted 100 basis point hike from the Fed is, quote, in play, says CIBC. U.S. equities are fresh session lows with the S&P 500 now down 3% and the NASDAQ off by 3.8%. It's an ugly day and comes with the market pricing in higher rates. CIBC hasn't changed its calls but flagged the chance of a more aggressive Fed. The Americans saved on gasoline but paid more for just about everything else in August. The result was that core inflation was red hot, raising the odds that the Fed will consider either a 100 basis point move at the next week's FOMC or a higher terminal rate than 4%, economists at CIBC wrote. Looking deeper at the report, they note that a variety of core measures were particularly hot. They were broad-based advances in core categories that weren't expected in August as health insurance and dental services prices accelerated, adding to strong increases in car insurance and car repair costs along with new car prices. The increase in car prices was unexpected given the fading of supply chain issues in that industry and the impact of higher borrowing costs on demand. The market is now pricing in a 19% chance that a 100 basis point hike next week, with the terminal rate now at 4.3% in March. We'll admit that this data was far enough above our expectations to have at least some consequence for our Fed call. We are looking for a 75 basis point in September move and a peak of 4%. And while softer economic reports still suggest that the Fed will have to pause by year end, either a 100 basis point move in September or a peak of 4.25 are more in play than we thought ahead of these data, CIBC writes. The US dollar is edging back towards the highs of the days and has reached them versus the Canadian dollar and Australian dollar as oil falls to a session low of 85.83 from Forex Live. In other words, there is still some room for interest rates to rise further here today if more people start to make this bet on a 100 basis point hike. Make your next video on how companies are added to the S&P 500? Well, okay, that's not a bad idea, actually, but I don't think that would be. I think the video that I can make that will get like the most viewership on YouTube and help the most people out is why price action is bullshit. That's what I think at the moment. I was feeling it yesterday and it's like, you know what, guys? I just really hate price action because so many people are losing money on it. And you know what makes me mad is when you hurt my boys, my people. What are my people now? I used to be a refugee, folks. Used to be Unreal Tournament, and Epic killed it. So I've been a refugee all these years. Did a little bit of stuff with the rave scene, but kind of eventually didn't really go very far with that, and kind of realized that it just wasn't my crowd anymore. And then I became day trading. And day traders are my people. Stop screwing my people over. Stop teaching them bullshit. Stop telling them that they can just trade off of the noise and that they'll make money. Stop taking their money. Let's teach them good stuff. Of course, I want to make money too. And I don't want my edges to be taken away. But I just can't sit by and watch these people just completely mislead the whole retail day trading audience with this price action nonsense anymore. Can't stand it. Can't stand it. So that's the video that I want to make. My price action is bullshit. Okay, this is not stream beats anymore. Well, Treasury's sitting at the lower end of the range. We'll see if they make a push. I am seeing some selling in the for the last 30 minutes or so, selling in the 10-year pretty consistently. His friend's wife is named Flatulent Buttocks. What? You talking about Elon Musk? You know what I read the other? Maybe I shouldn't talk about this crap, but like there was this whole thing about who was it? The whole Amber Heard thing, that they were like involved in a sex cult and Elon Musk was in it and everything. I'm starting to wonder, like, are all of the rich people, like, I don't think that it's like some grand global conspiracy. I think that people will like, they'll run into a sex cult and then they'll assume that it's actually a bigger thing than it is. Now I'm starting to think, is it just a thing that like billionaires all start their own sex cults? Like maybe that's what, because I'm starting to feel like it's another one of those truth is naughtier is stranger than fiction. Wait, you haven't seen Monty Python Naughtiest Max? Oh really? From Flying Circus or from something else? No, I didn't recognize that as a Monty Python reference at all. I've definitely watched a lot of Monty Python though. Oh man, when I was a kid, my friends loved to quote that show, man. The Holy Grail. I don't really like The Life of Brian too. I thought that there was a lot of really funny, that show was very insightful for its time. Okay, it was the Life of Brian thing. I mean, the Life of Brian isn't perfect throughout. There are some points where I'm like, but overall, I thought it was insightful. Like they really did a good job at seeing where society was at the time and making fun of it. And you know, one of the things I remember hearing during the Trump administration was that it used to be that the court jester was like an important and appointed position, and that the court jester was there to, you know, make fun of the king to a large extent. That basically he was the one that was supposed to inject reality into things and make people question, you know, what they're doing and be the contrarian of sorts, you know? And I remember searching about that at the time and feeling like liking that idea a lot and feeling like that's things that society needs. And was there a lot of people making fun of Donald Trump? Yeah, but like, I don't know if anybody really truly played the court jester role well during the Trump years, because I can't think of anybody making that I was like, oh, they're so hilarious. There's leftist hacks, but not a true master of the craft per se. But now, ever since Donald Trump lost, the last 2 years, well, really it's been since COVID, so let's say the last 3 years, comedy has sucked, man. You know, it's like people are afraid to talk about it, and I'm not really seeing people really doing a good job making fun of Joe Biden. If they are, they're not. It's being hidden. You know. Another thing is court jesters used to be members of nobility of equal or near equal standing. It seems to me, this is another unanswered question about society. It seems to me that some people are better equipped for aristocrat work than others, right? But I don't think that it's right or healthy to say, okay, so let's have this upper class of people that make a ton of money and then just have everybody else underneath of them. I don't think that that's right. You know? The big problem from a nature level. This is a problem with nature. People will blame it on capitalism and society and stuff. It's not. It's a problem with nature that we as a society have to find structures to kind of combat, and we've done a very, very poor job at doing so. Is that those who win are likely to continue winning. It's the Pareto distribution, right? How do you deal with that? Right? Like, yeah, you do need people that are equipped for certain kind of aristocratic work that not everybody is good at. And I think that it kind of, a lot of that requires like it being part of your whole upbringing. But when you turn that into like a source of long-lasting generational power, that's created a lot of big problems, right? Because those people that are in that aristocrat position are not well equipped to understand what is going on with regular people at all, right? The job kind of requires, to some extent, disconnecting yourself from the problems with regular people. It's the exact opposite for retail traders, guys. Like if you ever become big, you make millions of dollars trading, okay? Don't become this person that spends all their time at the country club and showing people off their hot car. Continue to be poor. Seriously. Because it's that connection with the travails, you know, the struggle of everyday people that's going to keep you grounded to be able to continue trading well. I'm going to leave you guys with that. I got to get going. I will see you guys tomorrow. In the meantime, stay excellent, team.